The U.S. is considering new restrictions on AI chip shipments to China, according to a report from the Wall Street Journal. This as concerns mount over the possible threat of an advanced AI in the hands of U.S. rivals. Shipments to China from chipmakers like NVIDIA could be blocked by the Commerce Department as early as next month. Chipmaker shares falling pre-market on the report. An earlier string of actions and sanctions in October, they blocked certain advanced chip shipments to China from the U.S. manufacturers. NVIDIA and AMD, they skirted those restrictions with downgraded versions of their chips that fell under sanction thresholds. The block also spurred heavy Chinese investment in domestic chip manufacturing as well. And so there we were taking a look at some of the chip makers. Of course, it's important to remember that there are two parts of this broader process. There's the design that takes place, and then there's also the fabrication. But for any of the fully completed, they're also looking at where those shipments might actually take place on fully completed chips into the hands of other actors or other nation states around the world as well.
Right. And some of the analyst commentary this morning, even for the likes of NVIDIA, has been that even if the company gets a fifth of its revenue from China, that this won't necessarily shrink that to nothing, right? That it will affect perhaps some of its chips there. But I think the bigger question is whether this is one thing or the thing that might slow down or break the AI rally. Yeah. I don't know about that. So let's bring in our panel for this morning. Callie Cox, eToro USA investment analyst, and Matt Maley, Miller Tabak equity strategist. Callie, let's start with you here on this China news, right? It's sort of, it is just a report for now. We should caution. We don't know what's actually going to happen. It's definitely affecting these chip makers in pre-market trading. How seriously should investors be taking this?
Well, Julie, I think this is where the rubber meets the road, and I think AI is a great story. I think it's hard to argue against the fact that it could change the world, but these bumps happen when we're talking about new technologies, and this is a very new trend. And of course, the market is reacting to it because, it's been hype for most of the first half of this year. So I would tell investors that, this is kind of part of the process. This is the world figuring out where AI fits, and there are going to be ups and downs.
Is this the first in the AI FOMO trade, if you will, Matt?
Yeah, I do think that this group has had an unbelievable run, and whether it be the AI stocks in general or the chip stocks in particular as well. I mean, you look at obviously NVIDIA is up 40% in just less than a month, and almost 300% since last October. So on a technical side of things, it's getting very extended, also very expensive. So it'll be interesting, not only this week, but as we move into next week, when we're after, in other words, we get past the beginning of the second quarter, and a lot of these institutions, they want these really high flying stocks on their on their balance sheets as they have or within their portfolio, but they might start to pull back a little bit because of this concern. I mean, this is I guess my point is that this news is coming at a time when the stocks are overbought and expensive, and it could be a reason for short-term traders to take some profits and longer-term traders to pull back and wait for maybe lower levels to add to their positions.
It does feel like more broadly, Callie, that investors have sort of shrugged off geopolitical tension risk between the U.S. and China. I mean, yes, you get some flare-ups like this in some instances, but it doesn't seem like by and large investors are that worried about it. Do they need to be watching it more closely, or is it okay to sort of pay attention on the margins?
Yeah, well, it's always important to pay attention to the world around you. I think we can all agree on that. Headlines like this do pop up. Some of them matter a lot. 90% of them don't. I'm not sure how much investors will put stock into this headline, certainly today, but for the days following, I'm not totally sure. But right now, with the momentum we're seeing in the U.S., with the excitement that we're seeing from consumers and increased confidence, we could be at a point where they ignore it. And who knows? This is just a report. We don't have the facts in our hands.
Well, one of the continued questions that I have, Callie, is just the fact that we don't know how much these companies are even spending right now on the research, the development, the advancement of bringing some of the solutions to market. So even with the absence of that, it's still not certain what type of margin profile we could even expect from these companies when they do bring it to the market and to their customer base as well.
Right, and this is the key of the AI story as well, because we talk about how AI could change the world. Again, I certainly believe that AI has the possibility to change the world, but we say that about a bunch of technology, and really we haven't seen this uptick in productivity and company excitement for a piece of tech since the early days of the internet. So the bar is really high, and if we see companies start spending on it to increase that productivity, and they put some serious cash behind it, which I think there's a possibility that could happen, then that's where AI really makes me excited. But it'll take a while to see that.
Yeah, Matt, it's funny, to Callie's point, like the stuff that has changed the world. I mean, you could argue the smartphone has done a lot to change the world. I don't know that there was that realization, right, when it was coming out, how much it would change things. So I think, or do you think, that it sort of makes it difficult as an investable case here when it's difficult to predict?
It does, and Julia, one of the things that we have, of course, is that we remember what happened with the internet, and it certainly did change the world. We saw how Amazon changed the world, and yet Amazon, because it got so incredibly expensive and ahead of itself, it still got absolutely clobbered when the dot-com bubble burst. Now, this stock went down 90%, even though every single quarter during that decline, their earnings and revenues improved, and their margins, et cetera. But the stock had gotten too far ahead of itself. Now, it had gotten way more than ahead of itself than the AI stocks did. So I'm not saying NVIDIA and these names are going to fall, 80 or 90%, but they could fall quite a bit. And, that's normal and healthy during these big runs. But my point, my biggest concern, though, is moving a little bit from this is that as we get into the second half of the year and we start to feel the real effects of the credit contraction that's going to come from this banking crisis that everybody seems to have kind of forgotten about, we could see some of these stocks fall back to earth a little bit.
So Matt, just kind of to follow up on this too, and the annexation of how we should be thinking about generative AI, is it more akin to the blockchain moment where you had every company just miraculously become an expert in blockchain technology and saying that they were going to have advancements within the next 18 months for their customer base? And where did that fizzle out? Or is this more akin to a smartphone moment where it is viable to have companies saying, all right, we're going to have this solution, and also other clients and customers of theirs saying, we're going to invest tens of millions of dollars, like KPMG had put in their survey, saying that their C-suite leaders are going to invest in artificial intelligence $10 million, many of them, in order to advance tax solutions, or Oracle saying that it's going to reinvent HR solutions as well. So what is this more akin to?
I think it's more akin to the issue with cryptocurrencies, and the reason for it is the iPhone or the smartphone situation came on more gradually, and it took time for it to take place. The similarity we have between what happened with the cryptocurrency and now is this excess liquidity that it got thrown into the marketplace. After the pandemic, we all know what happened with the Fed and all the global central banks, and for that matter, fiscal policy as well. But they flooded the system with liquidity, and that took the cryptocurrencies, which were already strong and already rallying already, way, way higher than they would have otherwise gone. We saw the same thing happen this spring when the regional banking crisis took place. We saw what happened with the Fed's balance sheet. They injected for a short period of time a massive amount of liquidity back into the system, and these AI stocks jumped way more than they would have otherwise. This thing will be a more gradual thing like the smartphones, and it will play out very, very nicely. The problem is we may have to see the kind of pullback we saw in the cryptocurrencies at some point in the middle because of that artificial injection of steroids that we got from the Fed because of two different crises.